Thanks for being here. I guess it's been a fairly busy last few days and hours. I've had the last hour or so with Mr. Ajay here, and it turns out we have a lot of interesting stuff that I learned, at least from him. Among the first people to have a loyalty program conceptually launched, I think this was ITC Welcome, you mentioned, right? Back about 40 years ago. Also turns out to be a senior from B School, so we had some more notes to exchange. But I thought, just to get the context set, we're talking about DPI, which is digital payments infrastructure. How it's evolved is quite phenomenal. Most of us are very used to using a QR code to pay even for a smoke or a small little pack of chips right outside our offices, right? So, how about we set the context, Ajay sir, with just, how do you define the span of what DPI looks like and what are the, let's say, real estates or opportunities available to offer a better consumer experience?
So let's have a little show of hands. There are only very few of us, but let's put our hands up, right? How many of you think DPI has more to offer than just payments? Of course, Vikas is a critical part of it. So a few of you know that it's got a little bit more. Help me, what else does it do? Will someone tell me what else it does in your mind? When you say digital public infrastructure, what does it do in India? Give me some examples. ONDC, okay, so it's a marketplace. Digi-Yatra, so it's an entry into airports. It's an identification system. What else? Namayatri, yep, okay. And hi, Ajay, good to meet you.
Hi, Ankur, please.
So we started, you want to do a quick introduction and
Yeah.
people get to know you?
Hi everybody, I am Timmana. I'm a career banker. I'm a Fintech founder. And I've been building on the DPIs they were available from last 4 or 5 years. My primary DPI was DigiLocker. And then the latest one, which is a hard one, is AgriData. So yeah, I'm trying to bring banking knowledge to Fintech. I'm not a technologist, but it's a domain plus technology now.
Awesome. So just when we were talking about what all does digital infra involve, he spoke about DigiLocker. So
I'm
thanks
just
for that.
asking what DPI means, and then you came in and gave us two which hadn't been named. So you can't aggregate and
So that was useful.
And
But yeah, I mean, let's probably have a more robust lay of the land, right? What all does DPI include?
Yeah, sorry, I think you want the definition, right?
No, I mean, just the scope of what all do you think it covers?
Okay, so it's okay. So you know KYC, right? KYC is a banker's language. I want to know you. It's a very tough language. Under AML guidelines around 2001-2, when we forced it upon good people like you, it was actually designed for, say, the wrong people, wrong money, wrong activities and all that. It hit you hard. You had to produce multiple inconsistent identities. It could be a passport, carrying it, copies and all that. If you carry copy, where is the original, who's verifying? Go to a gazetted officer, bring a letter, all that is got solved by Aadhaar. Aadhaar was the basic DPI. But when I saw in 2017-18, when I saw DigiLocker as a single source of truth, one document is fine. What about the multiple documents, connected documents? And we were one of the first requester as WhatsLoan. We applied as a Fintech. They said, why should I give it to Fintech? But we got an approval with a lot of argument. And that is the first DPI. Followed by, that GST happened, so many, now the IT returns are available in real time, and the MCA data is available with a click of a button. For example, with the one PAN number of a business, we can pick up 30 data points. That's a DPI connectivity. One is permission, one is purposeful. Permission, when it's PII, personal data, it has permission. If it's publicly available data, if it's a registry, sir, whether it's a company or land record, it's called a registry. You agreed that it is openly, publicly available, not permission. So with a purpose you can access. You have to establish a purpose. You have to work with a bank or a purpose and then access. That is the definition of DPI in a very normal consumer parlance.
Thank you, very helpful indeed, thanks. So now that we've got a lay of the land, right, what do we know? Number one, that you've got an identity, right? Now, as you said correctly, you can't use the identity freely. And in fact, very often the identity is not available to anyone, not even to the government in many cases. So for example, when you use Digi and you go through the airport, there's no Babu sitting in Delhi who can figure out that it was you went through, right? It's your phone and it's flushed after 6 hours. So now you've got data which is theoretically available, not practically available. But what do you have? You got the following things. Number one, you got an identity. Number two, you got real estate associated with the identity. That real estate is in somewhere in a, let's call it a four-dimensional space of three-dimensional space and time, right, with a digital interface. So I know you're in the airport. When you walk through it, I don't know who you are, but that doesn't matter because I know what flight you're on. So I know whether you're late for your flight, you've got lots of time. If you're late for your flight, I can say, hey, you want to still make your flight? Give me 500 rupees and I'll help you jump the queues, right? If you're really late, give me 2,000 rupees and I'll help you jump the queues, right? Now, what's the math going on in your head? The cost of my missing the flight is, let's say, 5,000 rupees, right? Because you buy a new ticket. So 2,000 rupees, 5,000 rupees, which one are you going to take, right? Now, you're there early. Digi knows this, right? I can give you a bunch of offers. You know, kill time in the airport. Go and have a great meal. Go and buy some stuff. Here you go. You follow where I'm coming from? So a little bit of imagination. Almost every one of the units of the DPI can be leveraged to give you some kind of customer delight, right? Now, over to you, because you're the customer guy, right? You're the guy who does all the engagement.
So, well, interesting lenses, right? So think of all the different moments in which you interact with the digital system. Like every one of us is now paying with a Paytm or a Google Pay someplace. But that moment, I mean, and as Google Pay knows which brands I spend on, which vendors I spend on, how frequently, how much money, they know an insane amount about us, right? But is that information being readily used today to show me a great experience on the app itself, the real estate on the app? So when you use this whole space-time construct, I mean, it might seem a little convoluted, but we're talking about a place at a certain time. I'm here at this particular physical infrastructure. I'm here today at 2:30 p.m. So this context means something. The moment you said that at the airport, that 2 hours are going to be at the airport in a time and space context, which means if there is an experience that has to be offered within this knowledge, then that's a powerful one, right? So similarly, if you were to look at the whole payment experience, like if you made a payment with a Google Pay to somebody you were buying chips from, you were there physically right now. Can be something differently done? Can I say that, hey, this is your 20th time this month buying this? As a brand, I'm happy to give you this. Can that happen in that moment? Technically, it can. It's about the underlying infrastructure. You could do a lot more with the amount of data that you have available. So that's as far as brands which are interacting with consumers directly, the payment systems, they can do a bunch of very interesting stuff. We were talking about loyalty, right? He's a career loyalty professional here, which means in his world, loyalty is about figuring out the economic models of how do I offer something which is a win-win-win, because brands want you to be loyal to them. They spend money on customer acquisition. On the other side, consumers would like a good offer. And in between, there are arbitrage available by, let's say, a Google or a Facebook where you spend advertising money. So maybe, you know, it would be interesting to apply that lens on how do you make a good economic model offering loyalty / benefits of some kind to the consumer by an intermediary like a payment platform.
So I think there are lots of examples, but let's use the one that you raised, account aggregator.
Sure.
Right? Somebody puts up their hand and says, I will tell you what my other bank accounts are. You're a bank, right? Now, let's think together. We're a very small audience, so we can all participate. It doesn't need to be one way, it can be two ways. Now, you're a bank, I'm your customer. I've put up my hand and said, I'm giving you account aggregator permission, which means now you know what's there in all. You guys are familiar with account aggregator, what it means? Yeah? Okay. So now you've got all my bank accounts, you've got everything, and you know everything about me. How would you use it as a bank? How would you make me more loyal to you? Let's hear some ideas. And then we'll turn to the expert to tell us more about, you know, what it means. Just the fact that you've got that one ID itself is a customer delight, right? It's a big thing. And what UPI has done is really, you know, replacing cash. You all know the saga of how, because of UPI, lots of sweet factories are going broke, right?
Candies, the ones that you use for change.
right?
The shopkeeper gives you a 1 rupee candy because he doesn't have change, right? That
So-
the whole business is affected very badly.
Yeah, thanks to UPI. Not that UPI set out to put the candy factories out of business, but they did. Account aggregator, help me. Give me some ideas. I'm going to pick on you guys if all else fails, yeah? We're colleagues, so we're allowed to. But let's pick you. Go for it.
We can understand what kind of requirements, financial requirements in terms of loans getting, going and investment pattern.
How are you going to make me loyal?
I mean, I can offer you something similar or better offering that, or if I'm seeing a trend in terms of whether you are trying and getting some smaller loan. If you are a loyal customer, you are maintaining a balance, I can give you one consolidated offer to pay all your small ticket loans and convert it into a single loan.
So basically one opportunity is loans. You're the loan expert. So how do you react?
Yeah, so account aggregator is a construct. Okay, you know that open banking in US, right? Yardley is one of the best who's built the rails. That was only limited to net banking. And how many people are familiar with net banking? Mobile banking is okay, but net banking and all that. So they constructed something like, we will create a separate entities, account aggregator under the regulation. And they'll be authorized to take your data with your permission for a purpose. I'm going to call out two things. Your permission with a purpose. It's not that I can look at your account and say, hey, you're spending, going to the bar and restaurant every day, because we reject a loan. If you're going too much to bar and restaurant, we reject a loan. So I am not supposed to look at that. I am not authorized to look at that. You can granularly say, I will permit you to look at my salary credits. I will permit you to look at my EMI debits. I will allow you to look at my rental debits. And very clear. This is so granularly built. Even the account aggregator is blind pipe. He's not looking at the data. He's just passing pipe between you and the bank. There is a giver that's called financial information provider, FIP and FIU. You applied to me for a car loan, and you are actually, I am Axis Bank, you are with ICICI Bank. It was very tough because banks were restricting this because they will lose the customer, good customer, right? Now that's opened up. It's like a democratization of your financial information. You had the financial information of the bank, but it was not readily available. It was restricted. Even today, there are only 26 banks, and still it's not great. And yeah.
Kind of example you use, for example, rental debits, right? Who decides which transaction is rented?
You will decide. The consumer decide, not the bank. I cannot say that, hey, you are dealing with somebody, taking money, giving money. I'm not supposed to look at that. What is my purpose? To look at your credits and debits. Not beyond that. Your personal life is personal life. PII data, anything beyond that becomes your PI, personal, sensitive, personal.
Transaction, will it be considered PIN?
Yeah. Yeah, that's why the granularly we give you. If you you download account aggregator app and you see, the granularly they're like asking you, I have to give you a car loan. You are not my slave. You are just a borrower, and you are a respected borrower. Even while borrowing, you are respected by me. And I'm going to look at only that, and it's very well built, sir. One of the best consent architecture, most purposefully, and it was not happening in the open banking.
Fair. The question I would go back to is the whole delight factor. Now, I'm a bank. Let's say I'm Axis Bank. One is I feel obligated to participate in this account aggregator framework, / I'm seeing a benefit of giving and then getting also the information back for my customers.
Yes.
So from an incremental value that I'm an Axis Bank customer, what else can Axis Bank do with that additional information that they're getting with account aggregators to actually have a superior experience?
Okay, about 10 years back, we started cutting the data. About 10 years back, we started cutting data and trying to do pre-approved offers, for example. That was at little anonymized level. You're good for this, good for that, good for that. I'm not supposed to look at everything, not only the data, your algorithms have to talk to your data, not looking, somebody is sitting and looking at your data, right? Now it went to the next level, like they should not look at your data unless you give that. Your bank can still look at your data, but cutting at a broader level. Now when you're purposefully going to a bank, another bank, if you're not an FIP, you cannot be FIU. You have to contribute data to receive data, like bureau.
Which is what, so, in order to take, you have to give first. That's the only construct where if you see enough value in getting is where you will be willing to part with it.
Correct.
So, which is why I'm curious when you say there is enough value in getting it as a bank, how do you deliver incremental value for yourself? So let's say I'm Axis. what am I getting from account aggregators to deliver better lifetime value for my customers?
Yeah, see, it's a little overrated, Should you know everything about the customer? If you ask me, being a banker, you should not. For example, you go to a pizza shop. The pizza shop say, hey, don't buy this pizza with extra cheese because you are a diabetic. None of your bloody business. I can die faster enjoying my life. Hey, forgive me, sorry. I said, who told you? I got the data from, say, public health department, health data.
Privacy would kind of be a topic where you draw a line on this,
including
right?
bank statement is a privacy
Absolutely.
issue. Yeah. So I'm just saying you can do certain things, but can't do beyond that.
No, so from a financial incentive,
Let me
I'm
give you
curious.
an example of what you can do. You all know fair as sorry.
So Ajay, I'll come back to a question about creating consumer benefits. I mean, so basically, when you extend the data, it can help you getting the personalized benefits and offers to the consumer.
Yeah.
When we talk about the consumer experience in this side, it can, by the behavior of consumer spend, you can definitely do some personalization to it. You can curate something special for this guy. So if this guy is a avid traveler, maybe you can give a free lounge access to him when he's traveling. Right?
Lots of things you could do. Let me just give you an example on Fair Isaac. Sorry, just give me a second. No, I'm going to give you a banking answer in a moment, but first I want to give you a generalized answer, then I'll give you a specific answer, and then I'll hand it over. Is that okay? Okay. Are you guys familiar with Fair Isaac and Company? It's a company in the US which gives credit scores, FICO scores, right? If you're above 700, you can get a credit card. If you're below, it's difficult, right? Okay. FICO.
Like Sibyl here.
Yeah, I mean, it changes the interest rate. So you've got a 780 score, you get a very low interest rate. If you've got a 680 score, your interest rate's skyrocketed. Okay. FICO would give you a score, right? So Vikas would have a score for Vikas, right? Now, they sold that to all the banks, saying that you have one view. I've got a view across all the banks. So you got the view of Vikas as Axis Bank, right? I've got it across 20 banks, so I can give you a much better view of Vikas. So it's worth buying my score. The bank said yes, and they paid. What they then did was said Vikas has got 8 instruments of credit, right? One of them is a credit card linked to his mortgage, right? That's the last one he's going to go bad on. One of them is a store card for some place which, if his wife found out, he'd be in trouble, right? That's the first one he's going to go bad on, right? Where are you? So they did another score called an next-gen score, right? And they sold that to the banks, saying, now you need to know which one you are, because Vikas is good, but where are you in his scheme of things, right? So they did an next-gen score. What they then did, and this is where it starts getting interesting. Anybody want to put up a hand? Yeah, go for it. What they then did was they created something called MyFICO, where they told you how to change your score, right? Each one of these charged, right? So they charged for a FICO score, they charged for next gen, they charged for MyFICO. So they told Vikas, look, your score is a little dodgy. Here are 3 actions you can take to improve the score. And Vikas paid us $10. What they then did, and this is where it starts really getting interesting, is they sold that to the banks, saying this is what we told Vikas, this is what he did. Now, to the banking example, right? Now you're Axis Bank, right? There's no FICO here. Think of the learnings that you got from there. Every unit of data can be reused in several ways, right? Now, to your idea, you're a frequent traveler. Now, the most evident thing is to give you a deal on travel, right? Sure, absolutely. You'd be grateful. But you know what? You probably got travel fixed already because you travel frequently. What can I do with that insight that you're a frequent traveler and leverage that? What else is likely to come with a frequent traveler? What are the probabilities? And at the point when you're traveling, which happens frequently, because by definition you're a frequent flyer, what can I do? Let's say stress. How do I reduce stress? So it's not the travel. The more valuable thing is what you learn from it. Right? Now, banks need to apply the imagination, right? Because very often you ask data for a purpose, but even within the purpose, you understate. Let's say, for argument's sake, I got rental data, right? Now, the obvious thing is, oh, you paying rent? Don't pay rent. Buy a house, pay EMI instead, right? What else can you do? Let's put this as a problem to the audience and ask ourselves, what can I do to change the dynamic? Right? I've got rental data. What else can I do with that data which gives me insight of who you are? Now let's talk about this in the context of what your total income is. If your rent is 1/3 of your income, remember government will take away 1/3? because the government of India is the government of India. You got 2/3, 1/3 has gone to the rent. That means half your net income has gone to rental. What does it tell me about you? As opposed to if 10% of your net income goes to rental, what does it tell me about you? Now start thinking. Back to you. Sorry, I promised you.
Yeah, I'll stick to the banker's perspective. You are the borrower, I'm the banker. So that's a good argument for me to take up. Lending, we are a credit starved country. ID is done, payments are done, fantastic. But credit is nowhere near that. So our credit is binary. You are a yes and no, that's it. Not like what granularly what sir is talking about, like, if you do this, I will do this. It's not like that so far. So, like, we don't have so much information on you. So we call it a lend and forget it model. Till you default, I don't even know you are a number. You are an account number, loan account number, some number. When you default, I know everything about your family, children, where do they go to school, because I have to recover money, right? So how do we do, okay, KYC is a lending model or lend and forget model. KYS, for example, you turn it around and say, know me. I'll give you more information, know me better, right? This is called buying model. And I know what you want, when you want, and I'll be there to service you. Next one, what I think, what the consumer side people are doing is an engagement model. We call it as financial lifestyle model. Your account aggregator is one of them. We're going to build around these rails. DPI is the digital rails. We're going to build around that. You will have a super lifestyle app. Not my app, not my super app, it's your super app. Then you will give me what, the more you reveal, the more you get incrementally. I incentivize to share more information with a purpose. So this is, I feel, is the next level.
You spoke about this whole interest rate variation because of my FICO score. In some sense, the amount of information that's now available with second parties, and if I give you permission to access that, is it already time that banks are open to this, that somebody with a good credit history gets a better rate? Because I don't think we're doing that yet. What's your impression, and where is it held up, and why is it held up?
So, for example, latest is B2C access to bureaus. It happened in US in 2017. I was the first guy to get access in India. I went up to US to get that approval. B2C access is, you have given me permission to access your B2C soft pull. You're not come for a loan with me. I am going to take you to the right place. So there I'm not selling a product to you, I'm buying your need. For example, think of a Bank Bazaar, Paisa Bazaar. They've used your bureau very well. It's a B2C pull. You're not doing a hard inquiry. If you get rejected, it won't hurt you, right? Now with that data, I'm going to go and propose it to you. We call it as running a business rule engine, getting criteria, and take you to the right place. So we're going to do more of this. Account aggregator is the next level, where you have invested is the next level. The more you open up, more we can do with you.
So I've come across some similar examples of people asking you questions, using that information to give you better advice and sometimes decisioning. An ET Money kind of platform, some of you might be familiar, they have a 19-question risk profiling survey, wherein they ask you a bunch of things about what your risk appetite is, what your security needs are, and all of that. Basis that, they'll start to give you advice on what kind of portfolio to design. Now, these are questions that have to be answered directly. But if they were to get to an account aggregator, they were to get to other sources of second-party data, which you'll give them permission to access, they might be able to do a lot more, lot smarter, with less questions from you. Is that where we see industry is headed, that people will start to use all of this external data about you to give you better experiences?
Yeah, one caution is, whatever external alternate data that we are talking about in banking, they are actually used against you, not for you. They are not improving your approval ratios, they are improving your decline ratios. So far, so good. I mean,
one of the funny things, and this whole privacy question always spooks people, SMS as a function contains insane amount of information for you.
Correct.
Half of the apps on our phones read all of our messages. Turns out there are now third-party services who crawl your messages and assign a bunch of scores, and they give it to anybody who wants it because the app is taking that permission to read that message. This won't probably be called as DPI, but this is becoming DPI because it's available. If it's permission, then you get it. As a consumer, my question would be, if I'm getting a better experience because I'm parting with my data, I'm getting a better rate, better whatever, where do you draw the line on breaches of security, privacy versus a better consumer experience?
Yeah, I'll give a quick example. I've tried this out. I get access to your phone, and you have multiple missed calls. It's a flag for me. I reject. He's avoiding some calls because he has to pay somebody. There is some relationship which has gone very bad. Or you have a repetitive, say, sorry to say this, you're visiting a bar and restaurant and those bills are appearing. Again, it comes up as a flag. That's why the more you know, actually, I've come up with borrowing a certain amount of money for a product. You don't have to know everything.
I mean,
It's
as a
not improving my
business, won't
chances
this
as
mean
a-
that the guy who's going to the bar is not going to get it, but that should reduce your overall risk, which means the guy who's not going to bar should get it cheaper?
So I think the difference is on the banking side so far, people look at downside risk, right? That's what you guys do. What you don't do is you don't look at upside potential, right? Now let me give you an example of upside. How much time do we have?
3 minutes.
Oh gosh.
Yeah.
So
So one closing statement maybe each, but one good example would probably be the best.
Okay,
way
so
to
let
do
me
it.
just give you an example of upside potential. Spends, right? Credit card spends. You look at credit card spends and you look at the MID which is being used. You look at the average bill in the MID, and I see that my friend Vikas's bill is 3x the average bill in that particular MID, consistently, bar. Right? So he's drinking 3 times as much or he's spending 3 times as much, right? The predictive value of that upside potential, you can also use it for downside risk, I get it. But the upside potential is always critical. Now, when you're looking at upside potential, right, banks tend not to do that because they tend to be run by people who are risk averse, and correctly, because they're loaning, right? But with the digital public infrastructure and what's happening is that you've got many ways of using data differently, right? Which is what I was trying to get at in the
Exactly.
initial part, which is that we can look at it negatively through the average banker's eyes, or you can look at it through the marketing person's eyes and say, how do I drive incremental customer delight, right? Which is really what it's at. So I think
absolutely.
that
I think
makes sense.
being a banker makes you conservative as to how do you reduce the risk. But as a brand owner, if I know all that information, as a brand which let's say is a retail brand, how many people are paying using Google Pay at this particular brand outlet? Can I offer a superior experience to somebody who's ordered, let's say 3x of what the average person does? Shouldn't that be on the Google Pay home screen? That's where, to me, this whole DPI infrastructure information, the more powerfully it can be utilized to deliver incremental value to people who are, let's say, being loyal to a brand or an experience, there's a lot of upside available to it. I think it's a matter of time. And on that note, thank you for the session. Any closing remarks, please?
Thank you so much. Thank you, everybody.
I think we started off with this room with like 3 benches, but thank you, everyone. This looks fuller now. So I hope the next session goes well. All the
Thank you
best.
so much.